Hello YouTube, I hope everyone is doing absolutely fantastic. It's Califax and I'm back with another one. And I would like to wish you all a happy 2025. I hope you guys had a great New Year's Eve. And I mean, the new year has, finally arrived. And, we've got to get back to business. That's what it is. So the topic of today's video is how to make 2025 your best year in trading. And what I mean about making your best year in trading is not on the financial aspect of it, the 10, 20, $30,000, but it's more about the process. This year, we want to make trading as simple as possible. We want simple rules to follow. We want to avoid over-complication, and we want to remove the guesswork. So that's basically what I'm going to be talking about in today's video. I want to just give you guys a roadmap of a simple system that you can follow every single day and taking out the guesswork. And I'm a lot of the times I'm thinking about all the people that hold the job, have a 9 to 5, and still want to take advantage of trading. I believe even in your break hours, you want to have a simple system that you can just follow during your break hours, like within 1-2 hours windows. 1 hour, 2 hour window, you can come and look for the simple system, like just a 2-step process that you can just wait for. If you see it, you execute. If you don't see it, you walk away for the next day. Okay, so that's basically that is going to be basically what we're going to talk about today. And this is the exactly same system we've been executing for 3 years on the mentorship. It's exactly the same thing without changing. Simple rules for simple trading. And without further ado, I would love to present you guys the Discord. This is the Discord of the mentorship that I have. Right here we have the chat group, and we have the full SMC mastery course. As you guys can see, we got about no more than 20 videos right here. And the idea of it is that I always had in mind when building this course was to make trading simple. We don't want to have 30-40 videos that just ends up complicating stuff. We want simple rules that people can follow every single day. And I have also trade breakdowns of the trades that we have executed since 2022 to the whole 2023, 2024. So you can see exactly that it's a very, very simple system that you can follow. Okay, so if you guys are very interested in joining the mentorship, there are a lot of people that are newbies, new to trading. They're just starting out trading and they want someone to be there for them. I'm totally free to do that, right? I'm here to help a lot of you guys be able to master the technical aspect of trading with a simple step-by-step process. Okay, so without further ado, guys, let's go straight into the video. So in today's video, the first trade that I want to talk about, what I really want to talk about is what am I looking for when I come to the chart, especially as an intraday trader. Because the reason why I'm an intraday trader is because of the possibilities and the opportunities that is when you go into the lower time frame. You have more opportunities, and when you really look at even when it comes to the stop loss placement, the risk to reward ratio is higher on the lower time frame. But you can also use the medium time frame. So there are three time frames that we need to have in mind: is the higher time frame, the medium time frame, and lower time frame. Our higher time frame is going to be the daily and the 4-hour. Medium time frame is going to be the M15 or M30, and the lower time frame can be M5 all the way down to M1. So that's basically what we use. So the step-by-step process that we want to use to make it simple is we want to align these three time frames together: the daily, which is the higher time frame, or it can be 4-hour, and we want the medium time frame such as M15, M30, and then the lower time frame. We want to align everything to come together. Okay, so in this example, this was a trade that I called and sent beforehand on the mentorship group. You guys can see right here, this is some of the the trades that I had, the charts that I had sent beforehand on this trade. This, I mean, you guys will be able to see that this was a beautiful, beautiful trade, and it's always a very simple step-by-step process. Okay, so for this one, we're just gonna need the daily time frame. No need to go to the monthly or the weekly time frame, especially as an intraday trader, even a swing. If you want to just be a swing trader, the person that answers on M15 or M30, we want to keep it simple to just daily time frame and 4 hours. So daily and 4 hours is going to be your higher time frame. Okay, so looking at New Zealand dollar from the daily time frame, we had this major change of character right here. So we had price was bullish up to this point, we had this high, we had this low, then this high, we had a change of character all the way down, and price had left this unmitigated order block. So that's when price only came, I mean, it came, this break was created at the beginning of 2024, and price just came here around September to do the full mitigation, and then we start to see price coming down. So the idea basically is, if we look left a little bit more, is we had also this change of this break of structure to the downside. So we have this range high and this range low. So basically price, the whole time price was trading within this range high. So let's mark this as a range high, and this will be the range low right here. So the whole time price was, all of this is just internal market structure, right? Internal structure within this range. So this was a swing structure high, swing structure low. Whatever is happening within that range, that's what we call internal market structure. So I'm actually gonna make a video. I think that's the next video that I'll drop, which is on market structure. We're gonna try to master market structure so you guys will be able to understand how to identify directional bias. So that's for the next video. So right here, looking at this on the daily, you have this nice break of structure to the downside. Price came back to do the mitigation, and now it's making its way all the way down. So what is the intention here? Is to see price to continue all the way down, to take out this daily previous low, which is this range low, and then maintain the overall bearish order flow. So that's the story you build. Just looking from the daily time frame, the idea is bearish. So if it's the intention is bearish, you want to be looking for sales on the other time frames. So on the daily, everything is bearish. We can drop down to 4 hour, right? So daily and 4 hour, that's our high time frame. Daily, I can use daily more just for the analysis, right? But on the 4 hour, if we look, once price had came to that daily supply zone above, we can see that we had this major change of character, right? That's the first break of structure that violates the previous trend. So we can see price right here up to this point was bullish, but once we had this break of structure right here, that's when we created the change of character, right? So the character, basically change of character means when price breaks or violates the previous trend. So the character of this previous trend was bullish, and once we have this break, it changed the character, right? So now is bearish. So that's why we have this push to the downside. And up to this point, when we was monitoring, I think this was a trade we caught in November, last year, November 2024, November. So what we was looking at was the order flow on the 4 hour. So we can clearly see that we had this break of structure, price mitigates, right? So price break structure, comes back to the order block to do the retest, and then break structure again, it came back to do the retest at this order block, and then it broke structure again and eventually came to this order block to do the retest. So we said, okay, 4 hour is our, as an intraday trader, 4 hour is our higher time frame. Once price comes to my 4 hour point of interest, what do we do next? We go to medium time frame. Okay, so I hope you guys take notes of this. Once you have a 4 hour break of structure, whether it's bullish or bearish, if price returns back to the order block, the next thing you want to do is drop down to medium time frame and wait for a break of structure, right? Or in this case, it's going to be the change of character. So price comes to my 4 hour supply zone. What do we do next? We drop down to medium time frame. We can be M15. So I'll drop down to M15. So when we came to M15, this M15 chart, I was looking for the change of character. I wanted to see price changing the trend from bullish to bearish. That will tell me that, okay, this 4 hour supply zone is being respected and price is making its way all the way down, right? So just reading the structure, we had this previous high, basically this high, and then price did a pullback. So he created this low, and then he created this high. So up to this point, the structure was bullish. Price then came back to this order block right here. So that's when price was respecting the demand zone, this M15 demand, but then it pushed up. We can see that price here struggled to create another higher high. So this was a sign that the bullish sentiment in the market is in depletion up to this point. So that's when we had this full break of structure right here. So that's when I saw we had this high, we had this low, and then this high, then this low, and then this failed high, price eventually created the change of character. So price broke structure, ended up coming back to this order block. Didn't find any trade here. I didn't, at the time I wasn't on the charts here. But once price gave, we were just patient. We said, okay, we missed the first opportunity. We can wait for the second break. Now, for those people who hold a job, have a 9 to 5, once you see one break of structure on M15, you can always decide to enter right here, right? This could have been your first entry right here. You can say, okay, I'll put on my stop loss somewhere here. So if this is the order block, you can put your entry here, stop loss above, and then take the trade. But if you would like to have more confirmation, just more, increase the odds more in your favor, you could wait for the next break of structure on M15. That's what we waited on the mentorship patiently. We waited for the second break, so that's what price gave us right here. So once we had this break of structure, we can see the last up candle before the down move. That's our order block, so that's what I marked here. So once price comes to my medium time frame point of interest, what do we do next? It's simple. We go to lower time frame. Okay, so I hope you guys really take notes of this, because that's basically this 3-step process when it comes to higher time frame. 4 hour and daily, that's our higher time frame. Medium time frame is going to be M15 or M30. Lower time frame is going to be M5 all the way down to M1. So we can use M3 or M1 as the lower time frame for entries. So once price came back to this M15 supply zone, what I did is I dropped down to M3 time frame. So on the M3 time frame, what am I looking for? I'm waiting for a change of character. Up to this point, I'm seeing price just pushing up, creating high highs and higher lows. So the character is bullish up to this point. The price just came into this supply zone. So if I want to see if this supply zone is going to hold, at least I want to see a change of character to the downside. That will tell me that, okay, I can now place a sell position. So using the bar replay, up to this point, we can see, okay, we have a high, we have this low, and then a high. I want to see price creating a change of character to break structure to the downside. So right here, we have the first break right here. I think it's very clear. We had this high, we had this low, price created this high. So this right here is the first break of structure that we had, right? So we had this break of structure, price ended up coming back. So this could have been the first entry right here, this order block, right? For those people that want to just have the one entry, one break of structure entry type, this could have been the entry. You could have entered right here. Me personally, I like to have more, another layer of confirmation, which is to wait for the second break of structure. So once I saw this, I said, okay, let me have another break of structure to the downside. That will tell me that, okay, price finally wants to come down. So we waited patiently for the second break of structure. So that's when price gave us this break of structure right here. Very, very clear, very, very clean. So we had a break right here. And the order block is very simple to see. It was this one right here. That was the second break of structure. So up to this point, once you see these two-step process as for entries, you can just set your limit order right here. 4.5 pip stop loss would have been good, or even a 4 pip stop loss. Some people would have preferred the 3 pip stop loss, no problem, that's very good. And a beautiful 1 to 3 or even 1 to 5 all the way down to this M15 previous low. I think it would have given a 1 to 6 risk to reward ratio. So it's a very simple step, guys. Very, very simple, very consistent in the markets. Once price comes to your M15 supply zone, if you want to scalp and take these very high risk to reward ratio trades, once price comes to your M30 or M15 supply zone or demand zone, wait on the lower time frame. It can be M3 or M1. Wait for this two-step process. Change of character, let price mitigate to give you the confirmation that, okay, it's holding that bearish bias. And then once you have the second break of structure, you can enter with confidence, right? Without deviating from the rules. So once you have that, you just wait for price to come back. You can set a pending sell limit, and at that there, and just wait for price to come. So that's when we get you get tagged right here into the trade. I ended up catching a trade using the seconds confirmation. I just wanted to increase my risk to reward ratio. That's usually what I do. I tend to enter on the seconds time frame. So I had a 1 pip stop loss on this trade. But a lot of people in the group were able to just set a limit order, especially because I sent exactly beforehand once we had the second break of structure. So it was just a beautiful trade for a lot of people. So once we entered, right there we can see that, price just went quickly to smash TP. So if you enter just straight from 3 minutes, this would have been a very easy 1 to 6 risk to reward ratio trade. Very, very simple, suitable for prop firms, personal life accounts, anything, right? So this would have been a beautiful 1 to 6 risk to reward ratio. Just target them 15 previous low right here. And we can come back, for example, to the medium time frame again. We want to look for targets. The target would have been this M15 previous low. And if we go back again to 4-hour time frame, what would be the target? Long term. Long term is, let me just go back to M15 and let me stretch a little bit the sell position tool. Okay, so let's go back to 4-hour, which was our higher time frame. So on the 4-hour, our goal is to see what we want eventually to see is price to continue that bearish order flow all the way to this 4-hour previous low. So we want to see if price is going to come down to take out that 4-hour previous low. That's part of the analysis, right? So we can see that just playing price eventually hit that 4-hour previous low. Then we can go back to the daily time frame and say, okay, if we go to the daily, what do we want to see? We want to see price taking out all these lows right here and eventually come to this this previous daily low right here that we analyzed before, right at the beginning of the video, right? So we want to see price eventually come into this daily previous low. For this would have been a 1 to 76. So for those people that would love to just hold the trade all the way down, this would have been a massive one. So if I keep playing price, we can see that price eventually started to come down all the way to breaking that daily previous low. So on this example, you guys were able to see how we started from the daily time frame, and we just analyzed from the daily, and we went on to take a trade on the M3 time frame. So you take a trade on M3 and you have targets all the way to the daily time frame. And this is how you take advantage of high risk to reward ratio trades. As you guys could see, there was no need for indicators, no need for volume. It was just a simple step-by-step process. So for me to just sum it up, guys, let me make it very simple because that was the idea of the video. Your higher time frame is going to be the daily and the 4-hour. Okay, so once you have a break on the 4-hour, you mark the 4-hour point of interest. So let me just quickly even mark right here with this line tool. So let's say you have a daily, you have a break of structure to the downside of the daily. So you have a daily supply zone. Once you have the supply zone, you wait for price to come back. Once price hits the daily, you drop down to 4-hour time frame. On the 4-hour, you want to have a 4-hour change of character to the downside, the break of structure. Then you mark the 4-hour supply zone right here. So this is the 4-hour supply zone. Once price comes to your 4-hour, you want to wait for M15 change of character. It can be one break of structure, and then you can enter right here on the order block, or you can wait for the second break of structure. That is no problem. And once price comes back to that 4-hour M15 order block, that's when you drop down to lower time frame and you wait for that 2-step process, guys. It can be one. You can wait for one break of structure. There is no problem. It's very, very valid. You could even see in this one, it would have been a perfect trade. But for a lot of people that don't like to lose as much, want to have more confirmation, want to increase the win rate, wait for 2 breaks of structure on the lower time frame, right? That 2-step process. Change of character, let price mitigate to confirm the bearish intention, and then once you have the second break of structure, that's when you enter with confidence. Okay, so for this first example, I really hope I made the point clear, guys. If you really enjoyed, smash the like button right here for your mentor, and let's go to the next example. So our next example is going to be of a case study trade. I actually didn't take this trade, but it's more for educational purposes, right? So I just decided to pick this EUR-AUD example. It's a very good one, but it's exactly the same system, right? Same rules, exactly same thing. So we're just gonna start quickly from the daily time frame. As we know, daily time frame and the 4 hour is our higher time frame, right? Especially for as an intraday trader, and for those people that want to be more of a swing trader, just execute on M15. You just need the daily time frame and 4 hour as your higher time frame, and then medium time frame can be for execution, or for the swing intraday traders, they can end up executing on the lower time frames as well. So looking at the daily time frame, what we had up to this point, we just had this major break of structure. So we had a break of structure, or let me say change of character to the downside. So we can see that up to this point, price was just pushing up with the high, the low, then this high, and then we had a change of character. It came back to the order block to do the mitigation. We have a second break of structure, and price just mitigated that daily supply zone. And as we know, once price comes to our daily supply zone, what do we do next? We can drop to 4 hour time frame. Okay, so 4 hour, always remember 4 hour and daily, that's our higher time frame. And 4 hour is like, that's what I consider to be the hourly time frame. So you can use the 4 hour, but if the 4 hour, for example, if the candles are two together, and you want a little bit of more information, don't hesitate to use the 3 hours or 2 hours. It's basically the exactly same thing. Okay, so for example, I can use the 2 hours and I can have more information now. I can see that, okay, we had this high, we had this low, the high, the low, and then price broke structure right here. So this is very important actually. So we can see that we had a break of structure. The swing low is right here, but the decisional low that caused the break of this previous high was this one right here. That's when price came, pulled back before it broke structure and created this high. So this is going to be our low that we want to see getting broken, right? So we had the break to the upside. So this right here is the break of structure right here. So we have this break of structure. So this is the change of character. So price comes to our daily supply zone. What we do next, we drop down to the hourly time frame. It can be 4 hours or 2 hours. So 2 hour time frame and 4 hour gave us a change of character. So we have a break of structure. Price comes back to the order block. The last up candle before the down move. So we can see the blue candle right here. So all of this is the order block right here. That's the order block. So price ended up coming back into the order block. So once price comes to my 4 hour or my hourly supply zone, what do we do next? We drop down to medium time frame, which is the M15. We want to look for an entry on M15 for those people that just want to, swing trade, right? You just want to enter from especially for the people that have a job. You don't have to go to lower time frame. Just keep it yourself to M15 and that's it. So once price comes to your 4 hour supply zone, what you're gonna do next is drop down to M15. So when we come down to M15, what we want to look for is one break of structure to the downside. So we can see right here, we have, if we read the structure, we had this previous structure high. So let me just zoom in a little bit. So we have this high, we have this low, and then price created this high. So the break of structure happened right here. We want to have body break, right? Body closure. So this low right here was broken. Now, if the first break of structure doesn't present a very clear order block, don't feel like you have to take the trade. Always wait for the second break. That just like the previous example. The first break wasn't clear or we missed the opportunity. We can always wait for price to give us the second break of structure, and you have more confidence there, right? The odds are more in your favor. So this was the first break of structure. Price ended up coming back to do the mitigation somewhere here. So we can say maybe this order block right here. That's where price came to. and price ended up providing the second break of structure. This was a confirmation of order flow shift, that we have shifted from bullish to bearish finally, right? So price respects the 4 hour, we come down to M15, we have a very clear order block. Right here you can see this break gave us a very clean order block right here alone. So we have this order block right here that we can mark, and we can say, okay, this was the order block. My entry can be right here. So this is going to be my entry. Stop loss above, I can go for like a, we can go for like a 14 pip stop loss just to give a round number, and a little buffer above for just to account for spreads. And our target can be this one. It can be like a 1 to 2.6 risk to reward ratio. If you want more, for example, this is a 4 hour supply zone, that's the break. So you can say, okay, I would love to ride price all the way to this 4 hour previous low for a nice 1 to 5 risk to reward ratio. Now some people may say, okay, when do I go break even? Go break even, I mean, the best place will be once price breaks this M15 previous low right here. So we had this break on M15, your entry was at the order block. Once price breaks the M15 low, you can move your position to break even, at least to just be risk free, right? But eventually you want to come down. The intention is to bring price to this 4 hour previous low. That's the first, I think that would be the first profit target. If you want 1 to 5, in this case this will 1 to 5.56, and some people may want a 1 to 3 just to get in and get out. No problem, it's absolutely valid. Okay, so if I just keep playing price, we can see price eventually started to come down. So we can see right there, once price took out that M15 previous low, that was a great time to move your position to break even. And we want to see price coming back right here to the TP, and we can see that the 1 to 5 was, I mean, beautifully smacked right there. 1 to 5 risk to reward ratio. And this is just let me go straight, for example, to 4 hour time frame. And if I go to 4 hour time frame, let me just quickly go to 4 hour. Let me see if price will stop playing out. Okay, perfect. So now that was the 4 hour, right? Price ended up taking that 4 hour target. So this right here was that daily change of character, remember, right? So that was the daily change of character. What I would want to see eventually, I will start targeting these lows, some of these lows right here on the, you know, on the 4 hour time frame. The idea overall, just on a long-term perspective, was to see price coming down to this daily previous low right here, for like a nice 1 to 37 risk to reward ratio. So you can see it's massive risk to reward ratio. Up to this point, we can see, I think so far it peaked a 1 to 16 risk to reward ratio, 1 to 18 risk to reward. So all the way to this daily previous low, that would have been a nice 1 to 37. I don't know if price ended up coming all the way down. Let me quickly see if that ended up happening. If you just keep playing price, I think price continued to push a little bit lower. Yeah, we can see price attempting to take out these lows. We see a little pullback, and let me just see if price came down. But you know, as you guys were able to see, this is the exactly same situation that happened on New Zealand dollar example. Is waiting for that daily 4 hour, and daily 4 hours your higher time frame, then dropping down to medium time frame such as M15, and then that's when you drop down to lower time frame. On this example, I just talked about the M15, especially for those people that have a job, right? They don't have much time to be on the charts. That's the exactly same thing. Even on the lower time frame, if you would love to take the M15, you could have gone to lower time frame and wait for the exactly same situation, just one break or two breaks, and it's very repetitive. So right here, you guys can see that that daily previous low was violated. So we can see that we went from the daily all the way to the medium time frame. We executed the trade, and we can see that price ended up respecting that, you know, taking out the daily previous low, maintaining the overall bearish order flow. Okay, so guys, that's how we will be able to make 2025 our best year. We want to simplify trading, make trading very simple. No need for many indicators, Bollinger Bands, and all this volume stuff that just overcomplicate trading. We want to keep it simple rules for simple trading. So if you guys enjoyed the video, guys, make sure to do me that favor, smash the like button. Let's subscribe, guys, and don't forget we have this Discord group right here with the full SMC mastery course. This is suitable for newbies, for people that are very new to trading, for people that have some sort of a little knowledge of trading. We have a very simple system. If you guys also want a one-on-one, someone to really be there during your journey of trading, I'm totally free to do that. So feel free to reach out. My contact is on the description box below, and I'm gonna see you guys on the next one. Peace.